Hey guys, it's Joe at Signal Centre. Just wanted to run through a chart setup on gold. Obviously, popular subject amongst you all on the chat, and just wanted to run through my charts on this. I've left them all blank, so I'm going to run through how I would analyse a market, just to give you an idea of what I'm looking to do and how I'm looking to play this particular one at the moment. I'm going to start off, as always, with a weekly chart. So we've obviously had this huge move up, this big impulsive move up that really started back here in April earlier this year, and we've obviously moved quite substantially higher up to here. The one thing that piques my interest here from a bearish perspective is this candle here, because we have a bearish outside week. Now let's just go through that candle. So we obviously made this move up to new highs here in August, up at 155.55. Bearish close. In the following week we gapped open to here at 15.27, 15.28. We've then gone all the way higher to make a new high at 15.57, and then we've come all the way back to close lower than the previous week down here at 15.06. So that's an outside week. So we've seen a new high and a new low. It's engulfed all of the previous week's price action. So that is a bearish signal. That's a reversal signal, and then we can start looking for lower prices, as we've seen here over the last few weeks, with obviously the exception of this candle here on the 16th of September. So let's take a look at the daily chart, and we can see this consolidation a bit more magnified now that's taken place here. If we're going from the lows, roughly around about this low in April, May, that we saw a move lower here, which the price action bounced from, and then we've seen a break of this trend line here on the 25th of September. You can also see the sort of beginnings of this head and shoulders formation that obviously we're all talking about. If we go from there, that's the sort of level that I really needed to see it break. It broke that on the 30th of September, and we've seen this retest here. Let's look at the 4 hour. This is where the head and shoulders really is most apparent. So we've got this left shoulder here, we've got the head, which is at the high there, potentially a double top as well. We've got the low of the neckline there, and then we've got this right shoulder. So that's the head and shoulder setup that we've got at the moment. We've seen this retest here yesterday, or of that low there specifically. That was at 87. So we got there, we tested it, we traded a bit lower, but then we've seen this buying re-emerge, and it's now looking to get above this 1487 mark, at which point then what do we do, I guess, is the main question. So obviously we've got a lot of money that's trying to sell this here, because they see this pattern, they recognize this pattern as being a bearish one, and therefore they're looking to get short. So we've got a load of money piling in here. The problems then occur if we break above this level. We've got a load of trapped short money. We've got obviously the majority, or most people hopefully, will cut the position once they realize that they're wrong. But you've obviously got this, a lot of people that will be holding on to their positions, expecting that it is actually going to come good at some point. So the real question we have there is, how long can they take on this move up here before they're completely squeezed out of their positions on the short side? They capitulate, so they have to buy all their positions back. That's what causes these big spikes, and then it ultimately will fail and head lower. So if we take a look at the hourly chart, which is where I look to execute from, I'm looking now for a level to potentially get short, and this is, say, the 60-minute chart. And what I'm most interested in is this move here from the 24th of September down to these lows here that we saw yesterday. This is where I'm looking to set a short somewhere along here. So we've got what I drew, I think, before I got rid of all my drawings, was a channel, which you can see there. So we've broken above that channel. We actually then came back to retest these two highs here perfectly before then bouncing off. So where am I looking to get short? One of the first things I do on this chart is draw a Fibonacci retracement table. So we have that. So that's taken from the highs down on the 24th, as I said, to the lows yesterday. And I'm looking then for the key numbers, the 50, the 61, and the 78.6. One of the other things that I use is the volume, or the market profile. I don't know if any of you use this, but it's pretty easy to get your head around. It's on the indicators. If you go to volume profile, then you get fixed range, session volume, or visible range. I've got it set on the visible range. Just unhide that, and basically I'm looking at, as I say, this move here from the highs down to the lows, and what this prints at the side is a histogram. Now this shows where the most volume or the most trades have taken place in gold throughout this period here. So why is that important? Well, this is signified by this dotted purple line, and also the biggest the biggest line on the histogram. This shows where the most trades have taken place in gold. So that's a key level, because that's where most people throughout this period here have transacted in gold. So can act as a magnet, therefore, on the upside. Or on the downside, depending on where it is. I'm just going to get this 50% out of the way, because I'm not sure it's going to be too relevant. What I'm looking for is a confluence of levels, and I've got that here with this 61.8% Fibonacci level, and also the market profile, or the point of control, on this setup here, which comes in at 1506 spot 44. Now there's also something else here that I like, which is the pivot points. I've got them set up on a weekly time frame. Those who are familiar with pivot points will know what I'm talking about. If you don't, then maybe take a look at those in your own time and see if there's something that you might be interested in taking a look at. But the pivot point for the week for gold also comes in around about the same sort of level. So we've got 3 levels there to focus on. So I'm thinking up here at this Fibonacci level, which I had on the screen a second ago, at the 61.8, also at the point of control. Also we've got this pivot point as well, all sort of coming together, and that for me is a glaring level where I'd like to potentially look at getting short. And not only that, this is, as I mentioned, you're going to have a lot of these people that have got short around here, and they're now thinking, oh shit, I'm wrong. Are they going to cut their positions, or are we going to continue to see people feed more short positions in around here, or these short positions capitulate, admitting that they're wrong? You're going to get this spike up to here before it then ultimately falls back. So I'm looking, that's why I say, for a level around about 1506 to think about getting short on gold. So that's just my take. Who knows whether it'll be right or be wrong. Obviously we've got non-farm payrolls this week as well, so it could all be a load of rubbish, but that's what I'm looking at, and where I think there could be some potential value for a short on gold today, or even over the next couple of days. So hope you enjoyed that, hope it was useful, and I'll speak to you soon.